Hello, and we got to talk about why the crypto market does not follow the stock market right now. First of all, for those of you that said, like, why isn't this crypto market at an all time high while the stock market is? First, we did actually get to an all time high. Yes, it was because of the ETF, but we did get to an all time high at 73K. And right now we're about 58.5K at the time of this recording. Relative to where we were this time last year, that is still pretty close to 73K. So the main asset, Bitcoin, is still pretty high. So are the next two coins, both Ethereum and BNB. And BNB also reached an all-time high. But of course, BNB kind of like is more like stocks than other cryptos because the owner actually buys it back and then burns some of it to maintain a healthy price or to keep increasing the price. So BNB does act more like a security or a stock than most other cryptos. But the other reason is there's crypto is just a scarier proposition to people than stocks. It also can be manipulated a lot more easily because it's a much smaller market. And I do believe the market makers and also now the big institutions are manipulating it to their liking. And remember, in the stock market, you don't have something like Mt. Gox. And there is no one stock in the stock market that pretty much every stock follows. Yeah, sure, Tesla kind of leads the tech sector or NVIDIA right now. But just because NVIDIA goes up or down does not mean the rest of the stock market goes up or down as well. There's not a stock like Bitcoin that affects the rest of it. And of course, there is no one selling like MT Gox, there's no one selling like the German government, and there's no one selling like the American government. So those are three major reasons. There's not like major sales. It's not like, there's like one big stock company, and then that basically is the index for the entire market. Yes, the DJIA is the Dow Jones Index, but that's based on what the rest of the market does and not the other way around. So stocks are not controlled by one giant stock like crypto is. And also, crypto is seen as a much more risky investment and kind of like an offshoot investment. What I mean by that is like the economy isn't doing all that badly. You can tell because people still have money to actually invest in stocks. If the economy was really that bad, people didn't have any money, stock markets would be at almost all-time highs. And it's not only the tech sector. A lot of big retailers like Walmart, Lowe's, those kind of people, those kind of companies are doing fine as well. So people are still working on their home improvement projects. People are still buying, as many groceries as they were, probably even more. People are actually spending more on luxuries and vacations. Maybe not like luxury items, but definitely vacations and experiences than they used to, even when adjusted for inflation. And that does not signal a weak economy because vacations and stuff like that are generally like the first thing to go if people really, really don't have money because people will choose like eating before they go on vacation. You can say, yes, people are maxing out their credit cards, but they've been doing that for like literally forever. So that behavior really hasn't changed all that much. So the thing is like there are still a lot of people with a lot of money investing. Why aren't they investing in crypto? Well, not all those people are in crypto, and there's a lot of fear mongering in the market. There's a lot of people that want to make the economy actually seem like it's much worse than it is. And then when when enough people actually like say those things, obviously some people start to believe in them, even though their behavior with their wallet does not match with what their actual belief is in their head, because they can hear these fear mongers and say like, oh, the economy is really terrible. Wait, let me go buy a new car, or let me go on this luxury vacation. See, like that behavior and what you're hearing, the voice you're hearing in your head does not match up, but they don't realize that. So I think the fear mongering is keeping some people out of the market. They're like, oh, I better be careful. I can invest in like the traditional stocks because they're less risky, but I won't invest in crypto because I'm not really sure about crypto, even though the ETF is there. And also, like, that's also why they don't invest in the altcoin market, because there is no altcoin ETFs. And of course, like the regulatory landscape is still somewhat unclear, even though it's pretty much assured that cryptos are not securities on the secondary market. Most people don't go through those regulations. So like, when they hear the governments talking about it, when they hear other people talking about it, they're like, oh, crypto shady, even though that's not necessarily the case. And the crypto industry does not really help itself. with memes taking over. I mean, I like the meme space. I think it's fun, but a lot of people are going to look at it and be like, oh, that's not a serious market. So they might actually shrug off because of that. And you're looking at right now with people panicking and stuff. You're definitely seeing that a lot of the crypto investors right now are basically degenerate gamblers, which means they either take super high leverage or they only invest in these meme markets, which obviously, it doesn't make the space look all that great. But mainly, I think it is because, of the fear mongering from certain people that, the economy's like really bad, even though people are still buying stocks like there's no tomorrow. And they're not buying crypto because they think it's too risky and they think crypto will be the one to drop first. And like an example of one of those people is like Robert Kiyosaki. He says like we're going for an epic collapse. By the way, he said this every year for like the last 10 years. He said we're going for an epic collapse, like one that we've never seen before. And then somehow magically afterwards, crypto, gold, and silver are going to rise from the ashes and go to incredibly high prices. $10 million for Bitcoin. Now, the chance of that happening is pretty much zero or less than zero, possibly, if that's even possible, which is not. But the thing is, like, he's like a popular author, Rich Dad, Poor Dad. And, his advice is almost as bad as his books, honestly. Yeah, don't actually follow some of the tax advice in his books. Some of it's good. Some of it might actually just land you in jail or get you a large fine. So I wouldn't really take his advice to heart, actually. And I'm pretty sure he's just doing it for clicks. It's like those YouTubers who say, we're definitely going to 3,000. We're definitely going to 9K. Because I do remember like Savvy or like Capo, all the way up from like, 15K all the way up to 73K or at least all the way up to 60K. They're like, oh, we're going back to like 9K. And obviously that's not going to happen. They're doing it for clicks. And obviously they're doing it for popularity. Or like they're trying to appeal to that part of the crowd that wants to be extremely bearish, taking a lot of shorts, and are desperately trying to get the coin to be lower so they can buy in at what they see is a fair price for them, even though there's no such thing as a fair price for them because they had like, literally 2 years to buy in at a low price and they didn't because they were waiting for a lower price. So it is a combination of the fear mongering, the fact that people still don't really see crypto as a mainstream investment and they're seeing like, meme coins take over, so they don't really trust the industry. And also because the US, Germany, and Mt. Gox are literally selling, and that kind of thing isn't actually present in the stock market. Also, like the regulatory concerns still scare some people off. So those are the main factors, like in that order. I think it's like the selling from the big institutions, like the big like settlement, Mt. Gox, like Germany, USA, the scare from the SEC still because things aren't there. The fear mongering that, the economy is like really, really bad, even though like all the signals point to the fact that it's not really that bad. And also just because people are trying to avoid it and basically get in more safer investments. And some people are just waiting for the bull run to confirm, which is stupid, by the ways, because when the bull run actually confirms, you've already missed out on most of the profits. All right, that's what I have to say for today. Like and subscribe, hit the bell notifications button, and I will see you guys later. Happy 4th of July, folks. And remember, we won our independence from the Canadians, and we can't let them take it back.